Good morning, everyone. Thank you all for taking time here. I guess before we get into the official business, go Hawks, huh? Good game, or at least great defense, and great field goal kicking. So thank you all for coming out. Great to see everybody here. Sold out event again. Topic at hand clearly draws some attention. I'm looking around the room and I think we're okay saying it's an adult crowd. So when we get to the discussion panel, I've told the speakers that be candid. So if there's a couple of expletives, we'll let it go. So tell us what you actually think. So let's go all in on this discussion. So my name is Paul Penner. I am the president of the Abbotsford Chamber of Commerce this year. And for everybody that's involved in the chamber, that is good news because as of March, my term's done. So things are gonna get a lot better because Sam Berry is going to take over next. So welcome to the Fraser Valley Economic Outlook and Housing Forum. We are gathered here today in the traditional territory of the Stolo people, the people of the river, and we are honored and respect the fact that we can live, work, and play in this area. We have a few special guests today. So we have, I haven't seen him, but he's paid for a ticket, so I'll announce him. Mayor Ross Siemens. Ross is not here, am I right? He is not here. All right, we've got Councillor Kelly Chahal, not here either. All right, we do have Councillor Patricia Dreesen. Is Simon Gibson here? I haven't seen him yet. No? Okay. We do have Councillor Mark Workington. So when it comes to election time next time around, remember who showed up. MLA Corky Neufeld. From our Chamber of Commerce Board of Directors, we have Mr. Steve Cooper. Jimmy Severin, I haven't seen Jimmy, is he here? Jimmy is not here, all right. Sam Berry, she's here. Thank you, Sam. And from our Board of Governors, and please let me know if I've missed anyone, but we do have Mr. Douglas McAdams in the room. Thank you, Ross. Come on in. We've got a seat for you up here. If you have any questions about the change, oh, and we also have another governor in here, Mr. Craig Toes. I didn't talk to him. I can't believe I forgot you. Welcome, Craig. If you have any questions about the Chamber of Commerce, if you are considering joining and haven't done so already, please talk to one of the governors, talk to one of our chamber directors, talk to Alex, who is our chamber CEO. Alex, you want to wave at people? So there we go. So talk to any of us. We would love to help you get connected with the chamber. And there's Jimmy Severin just walking in. He is also one of our directors. So thanks for joining us, Jimmy. I'd also like to take a moment to thank some of our pillar sponsors. These are the people that let us put on events like this. So we've got Rogers Media, we've got IGL Benefits, the Chamber Insurance Plan, we've got RBC, and Doane Grant Thornton, as well as Myriad Technologies. Special thanks today goes out to the Clarion Hotel and Conference Center for putting on the event. And today's event sponsors, BDC, Augustin Developments, and Blausen Homes. So thank you all. Now I'd like to invite Linda Eldebaja. Hopefully I got close on the pronunciation. All right, thank you. And she is from BDC, and she will be introducing the next speaker for us. So welcome, Linda.
I'm sure you remember. Good morning, everyone. My name is Linda Dabaja, and I'm the Business Center Manager at your local BDC branch here in Abbotsford. We have been a long-term members and supporters of the Abbotsford Chamber of Commerce and are glad to see this event come together. Canada is moving from a year of economic revolution into a decisive phase of economic evolution, and we can't afford to slow down. The urgency and agility that powered SMEs through 2025 must stay at full throttle because the old playbook is gone. Trade flows have shifted, AI is accelerating, and generational business transitions are reshaping the landscape. How we grew yesterday won't work tomorrow. The momentum we built is now essential because fast-growing businesses drive strong economy. And a strong economy is the best defense and enabler of our sovereignty. At BDC, we're the only financial institution devoted exclusively to Canadian entrepreneurs, and we support Canadian businesses of all sizes at various stages to grow. Our support for entrepreneurs takes three distinct forms. We do the financing in the form of term loans, we do the advisory services or consulting, and we do the capital investments. We are a patient and flexible lender and are committed to helping companies navigate through the new economic landscape. We know the needs of business owners as we work with 1 in 12 SMEs across Canada, and we have a 93% satisfaction rate. Feel free to speak to me or my colleagues here today if you have any questions about how we can help you navigate through the current business environment. We have Cleroux from BDC in the room, and then we have Pierre, our speaker today. It's my pleasure to introduce our speaker today. Pierre Cléroux came from Montreal, so welcome him, everybody. He was appointed Vice President, Research and Chief Economist at BDC in 2012. Pierre leads a team of experts who analyze economic data to identify business and sector trends impacting Canadian entrepreneurs. As seasoned speaker, he regularly travels across the country to help business owners understand the risks and opportunities presented by the economic environment. Mr. Cleroux is also responsible for providing economic analysis and advice to the bank's senior management team and supervises all marketing and industry research activities. Please welcome Pierre Cléroux to the stage.
Thank you for the introduction. Good morning, everybody. It's a good time. I think you will agree with me. It's kind of a good time to talk about the economy. There's a lot going on, and 2026 is going to be another year with a lot of different events. So my presentation has 4 parts. First, I'm going to start with what happened in 2025 to set the stage. I'm going to talk about the outlook for Canada, the outlook for BC, and I'm going to conclude about the outlook for the construction sector. So, but before I start, let me ask you a question. Who believes that we're going to have a recession in 2026? Raise your hand if you believe we're going to have a recession. Okay, some people. Okay. We already have one. Okay. So you are in the right place. I'm going to try to convince you that we won't have a recession. The economy is slow, for sure. In some sectors more than others. But in 2026, we should have positive growth, both in Canada and in BC. And I'm going to explain why we believe that. So let's start with last year. I don't know if you remember, about 12 months ago, we were in the middle of the tariff talk. And there was some talk in the US that we would have tariff on every single Canadian export to the US for 25%. There was a lot of uncertainty in the economy. At the end, we have some tariff imposed, not on every sector, but on some sectors of our economy. Steel, aluminum, lumber, that is very important for BC, kitchen cabinet, trucks, cars, So there's a number of tariffs imposed by the US government. On top of it, in the spring of 2025, China introduced a number of tariffs. It was actually a response to our own tariff to electric vehicles. As you know, Mr. Carney, our Prime Minister, went to China a few weeks ago and he came back with a deal. Most of these tariffs will disappear in a few weeks, or they will be lower in exchange of 49,000 cars, electric vehicles that will be able to be sold in Canada. But in 2025, we had tariff coming from China. So this was a new reality for Canada. Over the last 3 or 4 decades, we didn't have tariff imposed on Canada. Actually, in most countries around the world, they eliminated tariff. There was kind of a consensus that tariffs are not good for consumers. They're bad for economic growth. They're bad for businesses. So most countries have eliminated the number of tariffs. So this was a new reality with the new government south of the border. And this is having an impact on Canada. It's having an impact on our export. As you can see from the graph, at the beginning of 2025, we actually increased our export because Canadian businesses were rushing to export to the US before the tariff. But when the tariff hit, well, the number of export declined. And actually today, we have our exports to the US are about 4% lower than in 2024. In some cases, it's much higher than that. For example, our steel export is down by 30%. Our steel of aluminum is a bit down by 6%. So depending on the sector, some sectors were able to diversify to other countries around the world, but nevertheless, we are exporting less today than before the tariff. And when we don't export as much, well, we don't produce as much. So some sectors of the economy were affected by lower export. The line that you see at the bottom is the trade-related sectors, which include manufacturing, transportation, business services. These sectors were affected. The number of jobs in Canada in those sectors went down. The good news is the rest of the economy, the other line that you see on the graph is the rest of the economy. The rest of the economy continued to grow. So on one slide, you can summarize what happened in Canada in 2025. So the tariff did have a negative impact on some sectors of the economy. The number of jobs dropped, but the rest of the economy was fine. So that's the reason why we didn't have a recession in 2025, because the rest of the economy were not affected by the tariff. Actually, at the end of the year, in Canada, we concluded the year with more than 200,000 more jobs than at the beginning of 2025. So despite the uncertainty, despite the tariff, despite the lower export, the Canadian economy was resilient and continued to grow. But of course, if you are in one of the sectors affected by the tariff, like if we were located in Windsor, Ontario, where the automotive sector is, they are in recession. So in Canada overall, we were safe, but in some communities, the tariff they have quite a negative impact. What should we expect for Canada for this year? Well, there's 3 factors that are going to shape the economy for 2026. The first one is the negotiation with Cushman. When the deal was signed by Mr. Trump in 2018, there was a clause that in 2026 we're going to revisit the deal between the 3 countries. We are in 2026, so the 3 countries are negotiating to see what they could improve in the deal. So 2026 is going to be quite an important year for Canada, because as you know, we export for 75% of our export are going south of the border. So today, 86% of everything we export has no tariff. The sectors that are having tariff account for about 14% of our export. So, of course, the objective for Canada is to have a free trade agreement with the US with no tariff, with a free trade agreement for all products and services. We will see if we are able to achieve that. It's very hard to know today what will happen, but as an economist, I believe that at the end of the day, we will have a deal for 2 reasons. The first one is we are an important client for the US. we buy every year for about $450 billion from the US economy. So we are the number 2 client in the world for the US. China is number 1, Mexico is number 3. So we are an important player for the US economy. I know it's not what you hear south of the border, but that's the reality. Second reason is because we have 2 economies very integrated. So let's say the US withdraw from the free trade agreement, that will hurt Canada for sure, but that will also hurt the US. And of course the US government doesn't want that. So I believe for economic reasons, we will have a free trade agreement, but it's not going to be a walk in the park. It's going to be a tough negotiation, and we might have some tariff at the end of the day, even if we have a free trade agreement. The reason is the new administration south of the border, they love tariff. It brings them a lot of revenue. Right now, it's about $400 billion of revenue every year. So we might have tariff at the end of this negotiation, but we should have one. But, of course, it's not going to be easy, so a lot of uncertainty related to the trade issue in 2026. Second factor that is going to really be important for Canada, and this is not something that we talk very often about, is the fact that demography is changing in Canada. We had a lot of immigration over the last few years. The immigration threshold have changed, and we won't have as much immigration in the next 5 years. The graph is showing you population growth. This is the Canadian population growth. As you can see, in 2022, 23, even 24, the population has increased significantly in Canada. But the last quarter of 2025, actually the Canadian population decreased for the first time in many decades. So this is a new reality. The next 5 years, the population is not going to increase as much. And I'm going to talk specifically about BC a little bit later. So this will have an impact on consumption, on the housing market, and also on the labor force. So it will force businesses to deal differently with the labor force. And the final factor for 2026 is interest rate. We believe that interest rate, the policy set by the Bank of Canada, is going to stay stable in 2026. We believe it's not going to go up or down. Inflation is under control. There's no need to increase interest rate. And the economy is still relatively performing well, so there's no need to reduce interest rate. So more stable interest rate for the next few years, which is a good news for consumers, it's a good news for business, it's a good news for the economy. That should help, for example, the housing market. It should help also consumers. When interest rates are down, people have more money to spend. So 3 factors that are going to shape the economy, the Canadian economy in 2026. So what does it mean? Well, first, growth that we are looking for every year is not going to come from our export because of the trade tension that we have, because of the renegotiation. Business investment has been soft in 2025. It will be the same in 2026. Everybody's waiting to see what will happen with the trade tension. So growth is going to come mostly from the consumer side. Canadians have, the job market is good, they have a job, they have money, savings has been good. Canadians saved quite a bit of money in 2025, so they have money to spend. And we believe that just like in 2025, this year, consumption is going to be the main driver of the Canadian economy. For Canada, the housing market is improving. Has been improving in 2025 with lower interest rate and a good job market. We believe the housing market in Canada will continue to improve in 2026. Again, I'm going to focus on BC a little bit later. And another source of growth is going to be massive investment by the Canadian government for the next decade to restructure the economy. They're going to spend money on defense. They're going to spend much more money also on projects that they want to accelerate. And I'm going to come back to that because there's 4 major projects in British Columbia. So this is going to be the second source of growth. So our forecast is 1% growth for 2026. So not a recession, but modest growth. The potential growth for Canada is about 2%. So we're going to be way below the potential growth of the economy. So what does it mean? Well, you are in business, you're running a business, you know how much you can produce every year. Let's say you produce less. You're not at full capacity. That's the situation of the Canadian economy. We're not producing at full capacity because of the trade tension. So this is our base case scenario. According to, we believe there's going to be a deal between Canada, the US, and Mexico. So what are the risks to this forecast? Well, there's no deal. Let's say the US withdraw from the free trade agreement. Well, growth is going to be lower than that. On the positive side, let's say we sign a deal next week with the US, well, growth is going to be much higher than that, over 2%, because we'll export more, because businesses are going to invest more. So this is what we expect for 2026. BC now, the BC economy is in better shape than the Canadian economy because the export is not as focused on the US. 53% of BC export is going to the US compared to almost 80% from the rest of the country. So that's the reason why British Columbia is not as affected by the tariff as is Ontario, for example, or Quebec. The two provinces the most affected by the tariff are Ontario and Quebec. Nevertheless, some export drop in British Columbia. That's the case for iron part, that's the case of aluminum, and that's especially the case for lumber. Lumber is by far the sector the most affected in BC by the tariff. Our export dropped by almost $300 million. So that's the reason why you see there's some layoff in this sector, and that's really because of the 45% tariff that now our businesses are paying to export to the US. So that's by far the sector the most affected. So as a result, there's a number of jobs that was lost because of that, especially in the manufacturing sector. So this is the number of jobs in the manufacturing sector in the province. And because of the tariff, we have seen the number of jobs that has been declining. The overall jobs in the province continue to increase in 2025. So the economy added almost 20,000 jobs in 2025. So it's not important growth, but it's positive growth. So the economy succeeded to grow despite the uncertainty and the tariff. Last Friday, 2 days ago, the Statistics Canada released the new data for January 2026, and actually in BC, the number of jobs increased by 3,500 jobs, which is not a lot, but it's good, it's positive. Give you an example, put this in perspective. In Ontario, they lost 66,000 jobs just in 1 month in January 2026. So they are still affected by the tariff on steel and on automotive. So what should we expect in British Columbia for this year? Well, one factor that is going to help is lower interest rate. And the reason is the debt ratio in the province is higher than in the rest of the country. This is what you see on the screen. So this is not surprising, it's just because mortgages are higher. It's not because people waste money, it's just because the average price of a house is higher here than in Saskatchewan. So obviously the debt ratio is higher in BC than, for example, in Saskatchewan. I pick on Saskatchewan, but I could have used New Brunswick or actually any other province. So when you reduce interest rate, you have a positive impact on the BC economy. 35% of people have a flexible mortgage rate. So each time the Bank of Canada reduces the rate, people have a little bit more money in their pocket. As a result, in 2025, retail sales in British Columbia has increased quite significantly. So we could see that lower interest rate benefited a lot of people. Actually, the increase in real estate in BC last year was the highest in the country. So when you reduce interest rate, you have a bigger impact here than in other provinces. And also the BC government has announced they're going to accelerate the infrastructure project and a number of permits they allowed for mining projects. So they want to stimulate the economy. They want to help the economy in this slowdown economy. So this is going to help the economy as well. So growth is going to be driven by consumption, and also by government projects. So that gives us 1.2% growth for the BC economy. Not a massive growth. If you look at this graph, it's nothing compared to what we had, for example, before the pandemic, when we had 3 or 4% growth every year. And again, just for Canada, the trade tension with the US is limiting the growth that we have in the province. But we are expecting to have positive growth. Just like in 2025, despite the uncertainty, the economy managed to grow. We believe it's going to be the case this year as well. So I'm going to conclude the presentation on the construction sector in the province. Construction has been outperforming the economy in British Columbia for the last 5 years. So the construction sector has been growing faster than the economy. And one of the reasons is because population growth was very significant. This is how the BC population has increased over the last 15 years. As you can see, there was really an increase, especially in the last 5 years. So BC is not unique. That was the case in Canada. For example, in 2023, we had 1.2 immigrants coming to the country. And in British Columbia had about 15% of the total immigration. So a lot of population came, and that helped for example, the construction industry. You can see here where I divide in blue is the residential construction that has slowed down since 2024. We saw an improvement at the end of last year, but it's still low compared to the historic level. The non-residential construction sector continued to do quite well. It's more the residential side that has been affected. And the reason is the housing market has been soft. When we look at the number of sales in the province, we can see that 2025 was a slow year, was slower than 2024, was kind of soft. And it's especially true in the Vancouver area, where the number of sales has dropped. In the Fraser Valley, we can see a pickup at the end of 2025. So at the beginning of 2025, we saw the number of sales in real estate has been declining, just like in the rest of the country. That's basically the uncertainty related to trade. About 12 months ago, in February, March, all the talk about the tariff, well, the housing market slowed down everywhere, including here in the Fraser Valley. But at the end of 2025, we saw a little bit of pickup in terms of sales. The average price of a house for British Columbia is stable, but a little bit lower in 2025. So the real estate market has been soft in 2025. So what should we expect for 2026? Well, we can see that the number of housing starts has been declining in 2025. Lower sales, lower immigration had a negative impact on the number of houses we're building. So we were a little bit lower in 2025 than 2023 and 2024. So what is going to help for 2026? Well, the lower interest rate should help the real estate market. When the interest rate are lower, well, it's an advantage, it's an incentive for people to buy more houses, and that should have a positive impact on the real estate market. Having said that, immigration, which is going to be quite different in the next few years, is going to limit the growth of the real estate construction. So this is the number of immigrants came to British Columbia in the next 10 years. You can see from the graph, for example, in 2023, we had quarters up of 60,000 people coming to the province. The last quarter, we had negative growth. Negative growth because immigration is much lower, but also we lost a number of temporary foreign workers that couldn't renew their visa. So again, for the first time in many years, just like for Canada, BC is not unique, but we are talking about the BC number because I'm here, but this is a new reality. Population growth is not going to be the same in the next 5 years than in the last 5 years. And this will limit the growth of the residential construction sector. On terms of the non-residential, well, the news are better. First of all, this sector has not slowed down as much, and there's a number of projects that will stimulate the non-residential construction sector. These are the 4 projects identified by the provincial and Canadian government to be accelerated. The first one is the number 2 of LNG. LNG number 1 is completed, and we have been talking about the number 2 project for years, but now it's going ahead. So this will help the non-residential. So for the next decade, there's going to be quite a bit of opportunities in the non-residential construction because of these projects, because of the accelerating of the government in terms of infrastructure program, and also because of the mining industry. This is where the growth is going to happen. So in conclusion, there's no doubt that the tariff imposed by the US had a negative impact on both Canada and British Columbia. In some regions, the impact is bigger. The overall Canadian and BC economy continued to grow in 2025, but at a very slow pace. This is going to be the reality for 2026 because of the trade tension. That will limit the growth of both the BC and the Canadian economy. We believe that we won't have a recession. We have growth. The growth is going to be limited, going to be modest for 2026. If we succeed to have a new free trade agreement, well, that should stimulate the economy, that will stimulate our export, our business investment, and we should have better growth for the next few years. So I'm going to stop here. I think we have time for questions. So thank you.
Okay, thank you so much, Pierre. I'll just briefly introduce myself. My name is Alex. I lead our team at the Abbotsford Chamber of Commerce. I appreciate that you provided that economic outlook in a way that was a little bit, you had a little bit of a positive uplift there, so it's not all doom and gloom. But now's an opportunity to dig into that a little bit more and to invite all of you to ask your questions. And so moderating this conversation will be Hayley Woodin Hastings. She serves as strategic advisor to the BC's head of state, the Lieutenant Governor of British Columbia. In this role, she works closely with the Honourable Wendy Kokia to support initiatives that advance economic opportunity, innovation in health, and meaningful inclusion. Hayley is also an award-winning journalist and editor who previously served as editor-in-chief of 3 publications, including Business in Vancouver, the largest business news platform in British Columbia. Hayley, I'm so happy you're in Abbotsford. I want to welcome you up to the stage. Come on up.
Good morning, everyone. Thank you so much, Alex. Thanks to you and your chamber team and everyone involved in bringing us together today for these important conversations. It's wonderful to be here in Abbotsford. And the traffic wasn't too bad when we were going the other way on Highway 1, so that was a real bonus. Pierre, merci beaucoup. Thank you so much for guiding us through the trends that shaped the Canadian economy last year and giving us a preview of what we might expect in 2026. I have a few questions of my own we'll start with, but as Alex mentioned, please take full advantage of Slido, and we'll try to get to as many of your questions as we can in the time that we have. So one of my takeaways, and Alex picked up on it too, there's resilience, which is a positive, but there's also uncertainty, which I think we're all getting used to at this point in time. There's a lot of uncertainty. If you had to pick a single biggest upside risk and a single biggest downside risk for businesses such as those in the room with us today, what would those be for 2026?
Well, the upside risk is really to finally sign a free trade agreement. Despite the fact that the free trade agreement is still good until 2035, because we have to re-sign or to revisit the agreement this year, obviously it would bring a lot of uncertainty. And the uncertainty is because we export so much to the United States. You know, in Canada, it's almost 80%. So even if we try to diversify, the US is an hour away. It's the biggest economy in the world. It's a growing economy. So we have been fortunate to be close when things are going well. So that's the number one issue we're following. And what really could help the economy is, you know, to dissipate the uncertainty that we have. The downside risk is, again, the free trade agreement. Let's say we have more tariff imposed on Canada. Well, that creates a negative economic impact on some sectors. And that brings more uncertainty. Like I said, uncertainty, you know, the biggest impact of the tariff so far is really the uncertainty. Because the tariff have a negative impact on some sectors, But a year ago, when there was a lot of hard discussion with the US, when consumption slowed down, the housing market slowed down, business investment slowed down, everybody, was waiting to see. Consumers got used to it, so the housing market picked up again, but consumption increased. But that could really slow down the economy if we create even more uncertainty with the negotiation.
Diversification is a key word because along with all of the tariff talk we've had, not only in the last year, but the past decade, diversification has been a big piece. Have we managed to diversify in a meaningful way our economy over the past year? Appreciating it, of course, it takes time to move the needle on these things.
Yes, you're right. It takes time, and that's what we realized in 2025. So we were successful in some sectors. So for example, this 25% tariff on lobsters that we export to China. So our export to China dropped by 65%, but businesses were able to diversify. So the total export of lobster in Canada last year was actually increasing. So big success, we were able to diversify to the rest of the world. But still, it's down by 30%. Our total export of steel is down by 30%. So it's not a sector that is easy to diversify. The steel industry was made for the US. It's very heavy to export. And exporting to Europe, for example, is not really possible. They produce a lot of it. Exporting to Asia, they produce a lot of it. So in some sector like steel, and I will add lumber to that, much more difficult to diversify. So diversification, I think, remained a great strategy because even, let's say we sign a deal tomorrow morning, we should continue to diversify to protect our economy. But it's not easy to do because we're very close to the #1 economy in the world.
It's hard to shake that, despite best efforts.
Location is very important, and for years we benefited from this close location. So now it's a bit more difficult because of the new U.S. administration.
What do you think this means for certain communities in BC that are heavily reliant on a single industry, say like lumber and forestry, that are dealing with this new tariff reality and maybe struggling to diversify? Look also to Abbotsford and the Fraser Valley, we have manufacturing, agriculture, sectors that might also be very exposed. Over the medium to longer term, what do you think those communities need to do to be successful? There's diversifying other markets, but would it also be diversifying the business makeup within those communities? What does that look like?
Yeah, I think that's the key. We can diversify to other markets. We can also have some value of what we do. In Canada, in almost every sector, we export a lot of natural resources. We don't make a lot of transformation. And it's true for aluminum, it's also true for lumber. So that's something that we need to change. We should have a higher level of transformation before we export. That would create economic activities here, will create jobs, but will also make us less dependent of the fluctuation of the commodity prices, but also of the tariff.
Given that we will see a renewal or renegotiation of Cushman this year, would you say it's a wait and see year for businesses, or are there still opportunities that can be seized for those that have the capacity to do so?
I think there's opportunities, and when you wait, you're not in action, and I think that you take a risk because your competitors might not wait and continue to improve their business. So there's no doubt that the current situation is not easy. The cost of doing business is increasing, because of the tariff, because we have a low dollar. We import a lot of products from in US dollars if it's not from the US, and salaries are keep increasing. So businesses, the biggest challenge right now is to stay profitable. On one hand, you have higher cost of doing business. On the other hand, you have soft demand. So we did an extensive research at the end of 2025. We asked Canadian businesses, what are you doing? What is your strategy in the current context? First, the good news is people are profitable, but it's just much more difficult to stay profitable. There's 3 strategies they're using. First, they invest in technology, AI, automation, to reduce their costs, to reduce the need for workers. We saw the numbers on demography. In the next decade, there's going to be more jobs than people in British Columbia. So as businesses, we have to prepare for that. We have to prepare for difficulties for our people, for pressure from salary. And one way to prepare for that is to invest in automation, in technology to reduce your need for workers. Second, you have to revisit your business processes. When the economy is slow, it's a good time to look at your costs. Everywhere in your business, how can you reduce your costs? How can you become more efficient? And finally, to diversify. And we talked about it, not only to diversify to other world market, but sometimes it's inside Canada or in other sectors. My sector is soft now, well, I can maybe look to provide services in another sector that is still growing. So that's the three strategy. Despite, we shouldn't just wait. We should really focus on our business, improving our business, prepare for what is coming, because growth will come. So it's a good time now to prepare for that.
Let's talk a bit about growth, because you noted consumer demand will be a driver of growth, government spending will also be a driver. If we see shocks in the employment market, is that consumer spending fragile, or do you think there's some room there to absorb any shocks that we might see?
Well, so far, the job market is relatively good. I mean, for example, in January, the BC economy created 3,500 jobs, the unemployment rate went down. So the job market is relatively good. Interest rates are lower, so it means that people have a little bit more money to spend. So we are optimistic about consumption in 2026. And the good news, consumption is 60% of the economy. So exports are important, of course. Business investment is important, but consumers in developed economies, they represent 60% of economic growth. So this is the biggest one.
And interest rates not as low as they have been, but historically still quite low. Are you seeing businesses decide to, in this year, despite uncertainty based on whatever their plan is, note that as an opportunity where it's going to make the most economic or fiscal sense for them? It's low enough for them to make some maybe big swings or big investments?
Definitely, for two reasons. First, they are, like you said, they are lower. Historically, they are on the low side. I know in 2020 we had almost zero, but that was because we were in recession. So they are on the low side, and they will be more stable, which is another argument. It's easier for consumers and businesses to invest when you have an idea how much you're going to pay on your loan for the next year, 5 years. So we believe that we are entering a cycle where interest rates are going to be more stable, and that should benefit consumers and businesses.
From a housing and development perspective, given that relatively low rate, but also the uncertainty and some interesting things happening in demand, what kinds of projects or investments do you think make sense in that sector in 2026 and beyond, and which ones maybe no longer make sense?
Well, I think the sector that is going to grow the most is the non-residential, because we're going to invest. When we say we, it's governments are going to invest a lot in the next decade on some projects, and that will help, that will stimulate the non-residential construction sector. On the residential side, I think the sector will improve because of lower interest rate. The job market is good, but we won't see the type of growth that we have seen in the last 5 years, just because immigration numbers are different. So we will have a growing market, but at a slower pace.
Across all of the trends, you talked about immigration being one, what we're seeing by way of exports. Does that apply fairly equally to our biggest urban centers versus smaller areas like the Fraser Valley, or are there other things, constraints, considerations that businesses in this region should pay mind to?
I think it's pretty much the same, except for some communities where they are, like for example, where the lumber industry is important, because they are specifically affected by the tariff. But beside the lumber, the softwood lumber, the rest of the economy has the potential to continue to grow. And what we are seeing is Vancouver has become a little bit less popular in terms of real estate. The price level is so high that investors are going somewhere else. And that should benefit, for example, the Fraser Valley.
We have some questions coming in from our audience. Do you have any statistics on housing starts for Abbotsford, specifically in comparison to the rest of the province?
Unfortunately, we don't. We have these data about the province, but when we go to region, we don't have this kind of data, unfortunately.
The numbers presented were generally absolute. How are we doing per capita with jobs, housing starts, GDP, etc.? What does that picture look like?
Well, in terms of comparing to the rest of the country, BC is one of province that has the best growth, better than the central part of the country. Ontario has been really hit by the tariffs. Ontario growth this year is not going to be, it's going to be below the Canadian average, below the BC average. Same thing for Quebec. The only provinces who are performing better than BC is Alberta and Saskatchewan, and they're still, growth is coming from the community, from the oil price that is still good. But besides Alberta and Saskatchewan, BC is going to have one of the best growth in the country. In terms of per capita, BC has one of the highest level of GDP per capita, just after Alberta, so higher than the average in Canada.
And General, if we were to follow that through, what does that then mean for British Columbians and businesses here? What kinds of opportunities will that unlock for us in the years ahead?
Well, I think there's going to be opportunities that might be, not maybe the traditional one. For example, softwood lumber, I believe it's a sector that is going to continue to struggle. And this is actually not new. As you know, we had a long dispute with the US on softwood lumber. It comes and goes. Right now we have 45% tariff, which is very important. The mining sector will continue to do very well. And the tech sector will continue to do very well. I'm going to surprise you. There's more jobs in BC in tech than in lumber, oil and gas, and mining altogether. So this is surprising, because when we talk about the BC economy, we often talk about softwood lumber, mining, but actually there's more jobs in tech than in all those three sectors together. So this is the future. This is where the economy will grow. Another sector that is really growing in British Columbia is medical device. We have a growing sector in manufacturing of medical device, and we have an aging population around the world, not only in Canada. So the demand for medical device is just really increasing, and BC is really well positioned to take advantage of that.
I think for some time it might still be true, but we had medical devices fall under life sciences. That was our fastest growing sector in British Columbia, so a real bright light.
Definitely, and it's a sector for the future, because it's a sector of value added, and with our cost structure in Canada, we can be successful in those sectors. We cannot be successful in in high volume sector, because our cost structure is too high for that. But in the health sciences, including the medical device, it's one of the sectors that you need to have high quality. All these products are developed with a lot of technology innovation, and this is what we are good at.
In terms of tech employment, does the data break down to tell us whether that's at Canadian-owned companies versus, say, American companies that are operating here?
Very good question. It's we don't have the data, but it's a bit of both. And I would say it's more Canadian. The U.S. companies have been in Canada and British Columbia for many years, and the good news about that is a lot of spin-off for that. People who have been working for that, they start their own company. So we have a lot of smaller companies in Canada, startups. They build apps. I was at BDC. We do a lot of events like this one, but also with our clients. And we did an event on tech with our clients. And I was surprised when I talked to people, every single person there, they were building an AI app. So I know that we talk about AI. I know AI is becoming a big thing, but I didn't realize there were so many new firms working on an application. Not all of them would be successful, but some of them would be successful. So this is a very growing area, and this is Canadian person who are starting this.
Is there anyone here building an AI app? Not one. Maybe an opportunity. Is there anyone here using AI and implementing it in their business? More hands.
Wow,
is that also a trend you're seeing across the country?
Yes, and we see that more and more. And actually, Canada is a bit lagging. When we look at the US, we can already see the benefit of companies who are using AI. We see the impact on productivity, on efficiency, and we believe it's coming to Canada. So business who are using AI, they are performing better than others. And you don't need to be a big business. I met a client in Vancouver. They are a headhunter, 5 employees, small business. They have made the software to identify in their, the resume they have. This software can identify the 10 best candidates in a few seconds. So when they receive a mandate, for let's say to find a CPA, well, in a few seconds, they have a list of the 10 best candidates. So that's saving a lot of time. So it's a great example of a smaller company who have invested in AI and they really see the benefits.
What potential markets should Canada target for exports due to tariffs in the US and China? Which other countries can buy what Canada produces?
Well, we often talk about Europe because it's a large market. It's 500 million people, and it's a growing market. But it's competitive to go to Europe. But that's a good market, and we have a free trade agreement with Europe. Asia, especially located here, Asia is a growing market. China will grow another 4% this year, and there's a lot of opportunities. We import more from China than we export, but it's a growing market. It's a more sophisticated market, so there's opportunities for Canada in Asia, everywhere, but especially in China.
Is there a lot of opportunity to be had from an interprovincial trade perspective in selling within Canada?
It's a good question. There's a lot of barriers between different provinces, and I remember I was in Kelowna a few years ago, and I visited a vineyard. I wanted them to ship wine to Montreal. It's illegal to do that. Is that fascinating? It's illegal to do that. So I bought the wine anyway, and I carried it. Because of course there's no border, nobody knew. But that's...
We now all know.
Don't tell anyone. I might buy some wine before I go back. But my point is we have to change that. You know, we have a small country, 40 million people. That's not a big country in the world. The US is 10 times bigger. So we need to have a free trade in Canada. So I encourage, last year when there was a big crisis because of the tariff, all provinces committed themselves to do that. A year later, there's kind of a momentum, but the momentum is not as strong because the situation is a bit better. But we should, whatever happened with the US, we should work on having one single market in Canada that will benefit businesses, that will make it easier for business to do business across the country. In the west part of the country like BC, Alberta, Saskatchewan, they already have worked on some aspect. For example, you can have the same truck, the same length of truck between provinces, which is great, but we should have that across the country. So that's something we should really work on.
Another question from our audience. What portion of our job growth is from the private sector versus from public sector government?
Yeah, I get this question a lot. There's a perception that all the new jobs are from the public sector, which is not true. Yes, governments are still hiring people, but most of the jobs in Canada and British Columbia has been created in the private sector. So the private sector, even in 2025, where the situation was a bit more difficult, most of the jobs were created by the private sector. There were some sectors continue to grow. One of them is tourism. I don't know if you remember last year, people said we'll buy Canadian. What Canadian did, they're buying more Canadian products, and where we see it the most is in traveling. Canadians are not traveling to the US as much. The numbers drop drastically. They're traveling more in Canada, and BC has been benefiting from that. A lot of people have decided to spend their vacation in Canada, and BC is a beautiful place. So a lot of people came here. So, for example, we have created a lot of jobs in tourism in 2025 because of the change. Canadians are buying Canadian more, and we should continue to do so.
The federal government has said it's prepared to spend on infrastructure, defense spending, which could create jobs in the private sector, of course. How good are we as a province or a country at translating that kind of federal government investment into more than just completing the project? So knock-on effects or domino effects that support communities, jobs, sustainable growth.
Yeah, very good question, because we haven't been very good in the past. We always spend money for, I take an example of the defense industry. We spend about $20 billion every year. There was no strategy to spend this money in Canada. So we bought equipment, mostly from outside the country. Now, as I think everybody knows, we have committed ourselves to spend more, kind of forced to, with our neighbors south of the border. So we're going to spend much more, about $40 billion a year, up to $50 billion. The big difference to me is we're going to spend it in Canada. It's a strategy to build a Canadian supply chain for defense. We don't have one. So we look for one when we started to work on this. So we're going to build one. And defense is not the only example. Not only the Canadian government want to build infrastructure with Canadian businesses, but it's also the case of provinces. You know, there's 3 big companies in Canada who are making electricity. BC Hydro 1 in Ontario, and Hydro Quebec. They have been investing in the past without really looking how they invest. No, I'm not blaming them, but now all of them are looking to build more infrastructure because we need more electricity, but they also want to make sure that most of this money is spent with Canadian businesses. So there's a new strategy. There was kind of a wake-up call last year about at this time, and this wake-up call is still in action, and that will benefit communities in Canada.
That's a good segue to our next question. Could you elaborate on the opportunities for businesses in 2026 despite headwinds that you outlined?
Well, in terms of infrastructure, there's going to be opportunities. The Canadian government has identified with the provinces 12 projects they want to accelerate, meaning not only they were going to spend the money to build it, but they will try to reduce the paperwork to do it, to accelerate the permit, for example. 4 of them, 4 of the 12 are in British Columbia. So there's going to be investment, projects going on in the province. On top of it, the provincial government is also accelerating their infrastructure program, but also the permit they allowed for the mining exploitation. So a lot of investment are coming that will start in 2026, and a lot of investment will be going around for the next decade. So opportunities, especially for 3 sectors: construction, manufacturing, we need a lot of equipment, parts, and tech. It's amazing how tech is everywhere now. Like, I was looking at the defense industrial strategy. I was surprised to see how tech is important in defense. Like fiber optic, radar, gathering intelligence to protect the country. A lot of the spending is going to be related to technology.
To put this in a little bit of context, is this a once-in-a-generation type of investment that we're seeing? Is it a once-in-a-decade? How do we sort of what the federal government is doing into a broader context?
For, I think it's probably one in a lifetime, because of the shock with the U.S. I think the Canadian government realized we have to diversify our economy. We have to focus on our strength, and we have to better defend our country. We have underinvested over the last decades in defense, and now it's time to spend more, to invest more in defense, to protect the North, to protect the country, and same thing for infrastructure. Part of the infrastructure investment is to be able to diversify, so we're going to build port activities to be able to ship more outside the U.S. Others is to develop our natural resources. So all this is it's a perfect storm. So I don't think we will see that we won't see that in every decade. I think the next decade is going to be special.
So that then makes it a once-in-a-lifetime opportunity for businesses that are able to seize this moment.
I think so. And like I said, not only we're spending more, but I think we spend it in a more smart way to make sure to have an impact here in Canada.
We have a BC-focused question. How do you think the provincial government is negatively impacting GDP growth in BC and businesses through excessive red tape and harmful policies?
Yeah.
It has the answer a little bit in the question.
I'm not able to comment. I don't comment on governments because, you know, BDC is part of the federal government and we don't comment on. I comment on the economy, not on government. Sorry.
But maybe we'll talk about the provincial economy. So what are you seeing and what are maybe some of the opportunities for whatever stakeholder to unlock more growth? Are there things that are getting in the way of our potential in BC?
Well, in general, not only in British Columbia, I think governments have to support businesses better. And it's not in British Columbia, it's across the country. I do this across the country, in every single province. I get this message everywhere. It's getting more and more difficult to do business. It's getting more costly to do business. So I think government have to understand that the growth, the wealth, is coming from the private sector. So we have to make sure that we make a business environment that is more business friendly, because this is where innovation is coming, this is where growth is going to come. So I think we have to realize that as a government across the country. That's why I was in favor of eliminating barriers between provinces. We have to make it easier. I'll give you an example, and I won't take a BC example because I don't want to get in trouble, but I will give an example in Ontario. I met a client in an event like this, and at that time I talked about productivity. So I said how important it is to be productive and how it's important to invest. And after, often I meet clients. So I went, that was planned that way. I went to visit this client. They manufacture truss for the construction to build houses. They manufacture that in Barrie, Ontario, and they sell it to Ontario, Quebec, Manitoba, and the US, the United States. So the guy said, you want to talk about productivity? Well, sit down, I'll tell you my story. So when he started 25 years ago, he needed a permit. Those trusts are very large. So they needed a permit to have it on a truck to take it to the US. 25 years later, he needs 15 permits. Every time his truck is going through a county, he needs a permit. So he said, not only I need a permit, but I need to manage it. He has a full-time person to manage all the permit he needs, even if it doesn't stop. Like from Barrie, Ontario to the US is a long way. Each time he's crossing the city, well, the city is charging a permit. So this is what we need to change. And I can give you an example like this across the country, especially in real estate. How much time it takes to get a permit to build something, we can really improve on this.
That's a good tie-in to our next question. Could you elaborate on how a declining population will affect the residential construction sector?
It's going to limit growth compared to what we have experienced in the last decade. You know, we had very strong immigration in Canada, and that was part of the growth of the demand for real estate. So we believe the real estate market will continue to grow, but at a different pace. Some people would say at a more reasonable pace, because it put a lot of pressure on price. You know, there's a reason why price has been increasing so much since 2019, is because there was a lot of demand came from people who came to the country. So in the next 5 years, with the immigration threshold we have, the population will continue to grow, but at a much more slow pace. So the real estate market will continue to grow, but again at a slower pace. Price will continue to increase, but at a much slower pace than what we have seen in the last 5 years.
We have an interesting question. We've been talking about the need to manufacture more secondary products to diversify our resource economy. What's holding us back? What would stimulate that kind of market?
It's a very good question, and we're not sure. I think it was just easy to just export. You know, we produce aluminum, we produce steel, we produce softwood lumber, and the US market was so good, so it was just easy to export those products. But as an industrial strategy, I think we have to improve on that. I think we have to have a better strategy to create more value here in Canada.
So that would be, in theory, a combination of strategies, policies around land, around permitting, around all kinds of regulation, but also supporting export and market development.
Supporting innovation in the country, supporting the development of you know, I'll give you an example, aluminum. we subsidize the production of aluminum in Canada. It's not a surprise, we have low electricity costs, so we subsidize the production of aluminum. We send it to the US, they make aluminum can, and they send it back. So if you buy a beer in aluminum can, the can is made in the US, but the aluminum is from Canada. We have to change that a little bit, because there's a lot of jobs in the value added. And so the way we support the industry has to be different to encourage the transformation here.
The Canadian GDP per capita was on par with the US about a decade ago, but it's been falling rapidly since. What are the main reasons and how might it improve?
The main reason is oil sector was a big stimulator for many years, and it's not as much anymore. So how can we improve that? Well, the projects that are going on right now to focus more on our natural resources, that will help to increase our GDP per capita. We need to improve our productivity, and our productivity is falling compared to the US, and it's a responsibility for everybody, for the government, like we were talking about before, create a better business environment, but it's also a responsibility for each businesses, because businesses are investing in productivity, so they have a big say in terms of our gap between Canada and the US. And I know productivity is a concept of economists, we love to talk about this, give numbers, compare. But the incentive should be for every business, if a business is not as efficient as it should be, they leave money on the table. There's a strong relationship between productivity and profitability. So we're not as profitable as we should be if we're not as efficient, another word for productivity. So as businesses, we should really look at how more efficient we could be. And of course, government can help as well by making a better business environment.
The final question before we close. You've been traveling the country, meeting all kinds of businesses. We have a fantastic group of business leaders in the room. I assume from a variety of industries, no AI app developers yet, but businesses that are embracing technology and innovation. What's your headline message to them as they try to make decisions for the balance of 2026?
Despite the uncertainty that we had in 2025, we were able to grow our economies. I believe that will be the case in the next few years. So it's a bumpy road, but there's growth at the end of this road, so I think we'll be fine.
Thank you so much for your time. A
Thank
round
you.
of applause for Pierre. Thank you very much.
Can I just get a round of applause for Cameron? Cameron's our practicum student, thank you. Really want to thank both of you for all of your insights and for the great conversation that we just heard on stage. We are going to take a moment to take a little break, have a little bit of a networking moment, interact with those in the room, and we'll be coming back together for our panel on building better. Before you go, I wanted to tease one exciting thing that's happening this week, because we heard about productivity in this conversation. And so the Abbotsford Chamber is partnering with the Canadian Chamber of Commerce to release some new data that actually gives us some great detailed on-the-ground numbers on how Abbotsford and all of the different economic sectors that are represented in our community stack up compared to Canadian cities on productivity. So some really good numbers. You'll be the first to see it, and we'll share that with you shortly after this event. But really wanting to dig into that local data, so something you can look forward to. With that, if I can have one more round of applause for Hayley and for Pierre. All right, good afternoon, everyone. It might still be morning. Good morning, everyone.
It's important because
Good morning, good
I feel
morning.
like if you just have people to focus on everything,
I'll invite all of you to come back
you're not going to have the
back
next
to your
generation.
seats. Okay, that wasn't too bad. Thank you, everyone. Hopefully you had a nice moment to network, chat with those in the room, and we're going to move on to our next part of the day. But before we do, I just want to take a moment and recognize that this week is Chamber of Commerce Week in British Columbia. So I'm excited about it. It's a great week to celebrate all of the work that Chambers of Commerce do across this province, and I'm thrilled to see so many of our valued members in the room. We are doing our annual member survey right now, so reaching out to our community of members. What matters most to you? What do you want to see more at Chamber events? What kind of programming do you need? What kind of policy challenges and business barriers are you experiencing that we need to know about so that we can be more effective advocates in the work that we are doing with every level of government in Canada. So I want to invite all of you to please, if you're a member, check out our member survey, share your opinions, your feedback. And I'll also take a moment here, I'm going to get our team members just to give a quick wave. So Jada, our events and sponsorship specialist, right over here. Thank you, Jada. And Amanda Thiessen, our manager of member experience and operations. And you all know me because you've seen me up on stage already. But if you have questions about the Chamber of Commerce, want to learn more, want to chat about something that you're experiencing in your business, feel free to chat with any one of us, as well as our board of directors that were already introduced earlier. So, you don't want to hear any more from me. I am really excited to introduce our esteemed panel. We've got some incredible local business leaders who are going to chat about the current state of affairs. You know, we've heard about that broad economic outlook from Pierre this morning, and now we're going to dig a little bit deeper into what's happening on the ground right here in our community. So I have the pleasure of introducing our panel. First up, and feel free to just come up when I call your name, I'll introduce Gerald Heinrichs. So Gerald brings over 30 years of real estate development expertise as founder of Heinrichs Developments, leading projects across the Fraser Valley. Formerly managing partner, director of acquisitions, and president of Mission Group Construction, he drives land acquisitions and now delivers commercial projects and communities into communities throughout the Lower Mainland and the Interior. So welcome, Gerald. Glad to have you here. Lesa Lacey, who is the business manager at Lacey Construction, a 5-time custom home builder of the year, a community leader. She serves as CHBA-BC President and sits on multiple boards. She's passionate about women in trades and is an award-winning advocate supporting workforce development and local food security initiatives. Great to have you here, Lesa. Thanks for being here. Next up is Jeff Rank, who is a leading Vancouver real estate executive and senior vice president of leasing commercial at BC QuadReal Property Group. With 38 years of experience, he's held senior roles at Bentall and Cushman and Wakefield, overseeing leasing, strata sales, pre-leasing, and contributing to BCFSA and Union Gospel Mission locally today. And lastly, we have Dave Algra, who started in the construction industry at a young age, and with 2 of his brothers, who built their development company, Algra Bros, having designed, developed, and constructed and marketed pedestrian-oriented residential and commercial developments throughout the Fraser Valley. The Algra Bros have gained a passion for how the spaces we live and work affect our daily lives. So great to have you here, Dave. And lastly, but not least, you've met him already, our president, Paul Penner, who brings decades of leadership in customer service as a former retail business owner and realtor for over 30 years. A 2-time #1 commercial realtor, he balances residential and business needs and has been, a passionate champion of the Chamber of Commerce for many years. So great to have you here, Paul. I'm going to hand you this microphone, and the stage is yours.
Thank you, Alex. So earlier today, we heard a lot of phrases. We heard comments about innovation, efficiency, diversification, collaboration. A lot of comments about how we can adjust. As the saying goes, never let a good crisis go to waste. Well, we've had our neighbors to the south grab the business snow globe and give it a good shake. So we're all having to innovate, to adapt, to adjust. This event was actually started was an initiative that we had at the Chamber of Commerce almost a year ago, where we sat down with these people and other people that are in the development industry and basically had a discussion of what's working, what's not working, how can we at the Chamber help to make it better. What I'm asking for you here today is, when we're looking at making it better, you're part of that solution. Whether you are in the industry and voicing your concerns, whether you have access to decision makers, or whether you are a decision maker. We can have these sessions and they can be very entertaining. Hopefully we can also affect change after this. So while we're going through these discussions, think of how can I help to move the needle on some of the things that come forward. You may not have access to the levers of decision making on all of these things, but you may know one or two people that can help to move the needle on a couple of these things. So hopefully going forward, we can look back at this and say it wasn't just entertaining, but it was actually helping to affect change. So that's the goal of today's session. So first question, and we can go in whatever order here, for the sake of the group here, let's start with a quick round of semi-introductions. So tell me about what projects, investments you're involved in the Fraser Valley, and what is your high-level take of the market?
Yeah, we were really focused on residential construction for a long time. 2021, we decided we didn't see a future in that, so we pivoted to commercial. So the last 5-6 years, we've been busy in downtown Chilliwack, building District 1881. We just finished that. That market has been decent. It's been performing well, considering the circumstances. Moving forward, looking at the residential construction market, it's not attractive for us, so probably mostly focusing on fishing and skiing for the next year. We do have some residential stuff in the pipeline, but it's going to be a matter of timing on when that works for us. So that's what we're up to now.
Excellent. Fishing and skiing are endeavors that I see as worthy, but hopefully we can get you back with a hammer in your hand. Jeff.
Hi, I'm here actually representing the commercial side, the industrial side specifically of the business. We are the developers of the Exchange Business Park at Mount Lehman and Blue Ridge, and well underway building a variety of buildings. I should probably do a quick 1 minute on what QuadReal is and who is behind QuadReal. We are the asset, property, and leasing managers for BCIMC's real estate portfolio across Canada. BCIMC is the largest public sector pension fund investor, and actually anybody that's here as a municipal employee in the city of Abbotsford, you are an investor in Exchange Business Park, so thank you very much for that. We are, I guess, endeavoring, we did go through a very long process of getting ourselves entitled to be able to build what we're building out there. Perhaps missed the height of the industrial market, but certainly are very committed to seeing our way through to about 1.2 million square feet of industrial space at Mount Lehman and Blue Ridge when we're complete with the project. So that's who we are.
Is it working? Oh, there we go. I'm Gerald Heinrichs Developments. We primarily are a multi-family builder, infill builder in Abbotsford primarily. Been building over the last 30 years in the interior and the Lower Mainland, Chilliwack, Abbotsford, Vancouver. We currently have a project which is office strata across from the Abbotsford General Hospital on Marshall Road, where we're developing strata units for professionals in the medical industry. We're just embarking on starting a new condo apartment on Ventura and Gladwin, right in the sort of core of Abbotsford Central there, close to the mall and Superstore. We recently finished a project on Mill Lake, which is a luxurious downstairs type of product, which is slowly but surely selling. A few units left if anyone's still interested. Our primary focus will be on diversity, I think, going forward. We've been through a lot of different cycles over the last 40 years. Actually, 4 years ago this month, I put a tool belt on for the first time. And thinking I might have to put it on again. And so we are constantly looking for new opportunities, not just strictly in the residential market, and also how the residential market is done. I think this probably changes over generations. So the way we look at building homes is the way we're going to look at changing things.
So we're a custom home builder. We do renovations, commercial work. So I don't necessarily invest on the same scale as these gentlemen. Where we see our areas of focus, First Nations communities and our partnerships in those communities. So looking to leverage potential federal funding from Build Canada Homes. For us personally, investing in BC is, well, especially in the Lower Mainland, it costs so much. It's really hard to pencil out any project right now, any pro forma with the DCCs and fees that we're facing. So personally, as a family, we're investing in Quesnel. So I think my sons are setting aside money right now to buy an apartment building with my husband. And yeah, it's not penciling out in the Lower Mainland, so we're looking north.
Thank you, Lesa. So clearly the market's tough. How are you reassessing the viability of projects, of initiatives that you're taking on, the strategies of going forward? Is it financing? Is it partnerships? Process changes? What's helping you to navigate through this uncertainty? Or is it just tenacity and I'm going to ride it out? So let's start with you, Lesa, and we'll work our way back.
Yeah, this is our 27th year in business. We're very fortunate, similar to Gerald, to have gone through a lot of ups and downs. We've bootstrapped, we've remortgaged our homes more times than I like to admit, and that is the life of being a residential builder, quite frankly. For us, we're fortunate to have a busy year this year, and in our slow times, we're looking to really reinvest in our team, so capitalize on the grants and funding that are out there, like BC Canada Jobs Grant, get some of our men and women to get their Red Seal certifications if they've been working on them for a long time. So that's our area of focus. I mean, the federal government really wants to push on modular. How likely is that, looking at the lots we have in BC and that ability to scale up? So there's some unique challenges being in the Lower Mainland, and I think for us, our focus remains on investing in our team and investing in our community.
Thank you. Gerald?
Yeah, we you know, for the past 20 years or so, in the condo development market, we would acquire a piece of land, we'd get entitlements, we'd put a marketing plan together, we'd build $1 million sales center, and we'd sell it out on a weekend. And did that numerous times with success. And sometimes it didn't come with success because that timing of that sale, obviously the product isn't complete, so it was also tricky. Controlling your costs on pre-selling something sometimes could cause issues, so that market ebbed and flowed. But until recently, that is the business model for a condo developer. In today's market, you cannot pre-sell anything. If I turn back more than 20 years, we used to build a condominium for sale. We'd build the entire building with no pre-sales. When we got to a certain point, we'd probably try to cheat and get a show suite in there somehow and start selling that product. And that was the normal way of going. And if that project sold out a year and a half from completion, that was considered a successful project. So when we sit here and we look back, you know, some of us are older, and we can see different stages, what we would call success. Going forward, what is success going to look like? I think we have to approach it with a bit of an open mind, but one thing we do know is we need more housing. We had a housing crisis that was talked about almost every day on the news, the housing shortfall, and all of a sudden one day we don't have it. So there's still underlying issues there. We need to produce housing. We need to keep produce housing. Battling the affordability side makes it have challenges. But I think, as mentioned earlier in the presentation, if you are standing still, you're going backwards. So our plan is to methodically try to push forward and keep that ball rolling, right? When you're surfing, you got to paddle out to the wave. So we're paddling.
So you mentioned that pre-sales are unattainable. What's getting in the way of getting pre-sales?
Well, you know, basically everything we talked about this morning, the uncertainty in the market, the challenge for financing, for young people especially, to get pre-qualified for a mortgage on such expensive product. And the pre-sales are normally condominiums or townhouses, but even that $500,000, $600,000, $700,000 range for someone starting out, even with a good job, it's hard to qualify to get that mortgage. So the consumer confidence is not there to take that step forward. Immigration has slowed down the pre-sale market as well, because we're not putting as many people into the country, into the province. So there's less customers with the same amount of product. So also, it's a lot of consumer confidence, right? So it's if that can change, the investor market is gone. We used to sell probably a good percentage of a pre-sale condominium, probably in the range of probably 20 to 35% would go to an investor market, which is gone in today's market because of the lack of confidence in the market. And we've had some historical high interest rates. I think you might see it slowly come back as we have, I'd say, a pretty decent borrowing rate today. And if we have some stability in that, we can see the investor market pick up, immigration pick up, student visas pick up, those kind of things that drive our economy well.
So let me follow up on that and open that up to everybody on the panel here. I hear comments that investors have been vilified in the residential real estate market. I also hear comments from Bob Rennie, for example, saying that without the investor market, we can't get the pre-sales that then trigger the development of the project. Are you seeing disincentives or seeing investors being discouraged from stepping up and getting you to that point with the pre-sales where you can get the financing? Maybe I'll throw it out to Dave over here.
Yeah, I think I've been in the business for 40 years, but I do feel older than I used to at these type of things. Builders, developers, and purchasers, since I've been in business, have been factoring in real estate appreciation into their decision. So when guys are doing pro formas on projects, I think people would cheat and put in real estate appreciation because it went up 7% last year, went up 8% last year. And I think a lot of developers use that as a factor in whether they're going to be profitable or not. And that doesn't exist today. And then on the pre-sale side, all those investors that are throwing down for pre-sales, why are they doing that? Well, they're banking on, speculating on appreciation. And this is the first time where we've had a sustained amount of time, it's been a few years, where people haven't seen that appreciation in the market. And on both sides, it's a massive adjustment. So it completely changes how people are going to approach buying real estate, and it's going to change, what your post-mortem is versus your pro forma, because you don't have that appreciation. So we also have 3 distinct housing types that we've been pushed into building, and we have, right now, our apartment or condo market is getting saturated at a far higher level than it traditionally would be. Like looking at the numbers that the Economist had up on the screen about housing starts in the valley, well, our housing starts are still good, but my suspicion is if we saw the breakdown of how much of that was 4 to 6 story wood frame mid-rise, how much is townhouse and how much is detached, I think that graph would look significantly different than what it's been for the last 20 years, like on a percentage scale. So we have all this, you know, with going rental now. I mean, that's what we're all doing, is leaning on CMHC to get financing to build this 4-story or 6-story stuff and rent it out. But moving forward, the way the banks are lending, the way our whole industry's been built here is based off of people speculating on appreciation of real estate. That doesn't exist today. Will it exist next year? I doubt it. Will it happen again? Probably. But we have to figure out a way to do business that's not counting on that appreciation. So from the developer, you know, looking at whether a project's going to be profitable or not, and on how you're going to sell the units. And maybe also that means looking at some niche markets where you can sell product, because there is still certain product that's moving. There's still certain segments in the market that want to buy, but the commodity stuff that we have isn't moving in the way it moved before. So I think figuring out how to sell that, how to finance it, and how to build that and be profitable that's whoever figures that out is going to make money, and the other people aren't.
So when supply side is one piece, and supply is typically driven by demand. And what we're saying is affordability is a big piece and holding back demand, but we're also seeing that demand dropping on the commercial side. So whether it's industrial lease rates, industrial selling rates per foot, there's definitely downward pressure on that. So that in turn pushes to the developer. Either the developer can find a way to adjust their input costs and bring a product to market at a lower price point and still find a way to make profit. Or if you're not finding a way to make profit, you step out of the market. So maybe we'll start with Jeff. How can we bring down some of your costs?
Wow, right to the heart of the question. I'm going to first off say that most of the things that the residential side have brought up does apply to the commercial side, be it industrial, be it office in terms of strata, in terms of investor interest. Certainly our entire market went from a build it and they will come. We couldn't build it fast enough, and lease rates went from $7 to $22 in the space of less than 10 years. That market has gone for us. The trick, I think, right now, because probably the speculator and the developer of strata is out of this market for quite a while. I think probably, in my opinion, 2, 3, maybe 5 years before we start seeing any meaningful speculative development. This is all about build-to-suits and finding people that have a specific need. You have land and you can triangulate a lease rate, building design, and delivery date that matches. So the trick for us, and certainly at Exchange, the route that we are going is to remove the barriers and the time that it takes to entitle your land, have a development permit ready for a specific building shape, and then find a tenant that your last hurdle to cross is only to get a building permit to build what offices or improvements inside the building that you require to achieve certainty on a delivery date. This probably matters more in the industrial world than it does in any other asset class, because most of those residential contracts, if your building took 2, 4, 6 months later, your contract would allow you to make that person wait. In our case, in almost every case, we're managing to someone's lease expiry, and that's a hard date, and you have to make that date happen. And oftentimes, most tenants, I will say, don't give themselves enough time to go through the entitlement process, the permitting process, the construction process, and then moving in time to manage their lease expiry. So it's challenging, but I think being proactive and taking as many impediments out of the process as you can has been, that's our formula at the moment.
So let's, I'll stay with you for a second here. Let's dig a bit deeper on that. When you started the Exchange project, you had the benefit of really nice crescendo of appreciation while you were in the project. So prices were going up continuously. That makes you a bit more patient in the development process because you're not getting punished by missing profit. You're actually getting a better number as you get further into it. That's gone. So if you take a market where appreciation is out of the picture, and then you look at that project, where are the pinch points that could be eliminated or reduced so that time is not your enemy in a market like we're in now?
Well, first of all, I'm going to make a confession that the first 2 buildings we built at Exchange, the market was very strong as we started construction, and then the market fell off the chart. And we built those buildings and waited for 12 months for our first tenants to arrive. So from the standpoint of timing the market and making money in the market, our first 2 buildings got us started and creating a critical mass that is the business part, but didn't make us a lot of money. I mean, they're fantastic buildings. The trick, and I think the inflection point still is be ready, because I think whether it's in Abbotsford or other municipalities, the majority of the people that we would compete with in the commercial world, they either don't have the resource, the wherewithal, or the desire to want to spend a bunch of money speculating on a building that might be. They want to know that I have somebody that helped me design the building, and we're going to walk through this together. There's a bit of calculated risk being taken, it's not as much risk in industrial, because a box is a box, and you decide basically how high your ceiling is, and the size of your rectangle is an awful lot of what industrial can be, but going through and taking away, because you aren't in control. You submit for a development permit with the city, or in our case, we had the Ministry of Environment together. Along with the city, we had to negotiate riparian areas as part of our overall project. You don't know whether those things are going to take 3 months or 3 years. And in some cases, with the ministry, it took years instead of months to get through the exercise. All the while, the market is sort of marching along either in a positive way or in a neutral way. But the entitlement side and minimizing the risk that the person that you're going to build this building for has some certainty and can plan for when they're going to be able to move in.
Dave?
Yeah, you wanted me to be candid.
Don't hold back.
Yeah, we're all guilty of allowing to happen what has happened. And when I say we all, everybody sitting here, everybody in Canada. Over the last 20 years, affordability wasn't a huge topic for people, and the last 5-7 years, government starts talking about affordability, and we need to do things for affordability. And I just think it's a lie that they aren't doing anything for affordability, and let me explain why I think that. So when we started developing, and I look to where we are today, I think about what has happened from the archaeological side, and I look at what's happened from the natural environment side, and I look at what's happened from the seismic side, and what about the accessibility side, and then life safety and fire. So there's all these agendas, the historic building side. So there's all these agendas that have leaked into real estate development, and they were always sort of there, but when we started, they weren't prevalent. So, for instance, trying to cut down trees and move soil on a site today to what it was 20 years ago, or having to do archaeological studies or indigenous consultation to get a site done, that didn't exist 20 years ago. The seismic stuff we're doing didn't exist. In the commercial building, bringing old buildings up to new accessibility code didn't exist. Making all the units adaptable in apartment buildings didn't exist. There's all these agendas that the government's been pushing on development, and it's impossible to make our build costs more affordable while these agendas are progressing. And then we come down to the municipality. I mean, they're guilty of it too when we look at how deep and how extensive the neighborhood plans or the planning process is and how prescriptive they're being with what we have to build is adding costs and adding time. But the municipality is the last one sitting there with all these other agendas that now have legislation that they have to look at and push our application through. So it's not just that. It's all these different things that we now have to satisfy. And we've allowed the government to push all these agendas into development. If you look back in the 80s or 90s, what people had to do, or what the government was forcing us to do from all these different perspectives, and I'm missing a few. There's more stuff that's happening than that. And you look at what a new house or a new home or a new office building or a new industrial building, what that's provided, like from a natural environment standpoint or an indigenous consultation standpoint or a seismic standpoint, it's a completely different building and a completely different development than what we built 20 years ago. So for us to sit around, and I've been at different affordability forums and talks and heritage talks and all these different things. What can we do to make it go faster? Well, let's make DCCs less money, or let's commit to getting a phone call back within 2 weeks. Sure, these are all tiny little band-aids on the issue that is the government, the federal government through the National Building Code, the provincial government through the BC Building Code, our municipal government is putting all these regulations into place to push these agendas. And as a country, we're telling government that, yeah, this is what we want. We want our housing and our commercial buildings and our industrial buildings to save more trees or provide more accessibility for people. And I'm not saying we should or shouldn't do this, but this is why it costs so much to build and why it takes so long to get permits. So if you want to change that, the government has to come up with an affordability agenda. How many people work in government that focus on creating legislation for consultation, or legislation for seismic upgrades, or legislation for adaptability or accessibility? There's hundreds and thousands of people every day whose job is to make buildings more safe from a fire perspective, or more accessible for somebody that has accessibility issues, or better for stream protection, or better for the health of trees. There's thousands and thousands of people every day who are trying to make it better for those agendas. How many people work in the government who are trying to make our build cost less? Is there one? No, it's not an agenda for the government. So when the government says, oh, we're going to do things to make things more affordable. Okay, well, you saw the immigration stats. Why is there less immigration? Why is there less students, like international students coming? Well, we're going to reduce the pressure on housing. I think that was a big factor in why the immigration is less, because they want to make housing more affordable. Let's go modular. That'll work. No, if they actually want it to be more affordable, they will slow down or retract on those other agendas, and that'll let us build cheaper. And until that happens, this is what we have. So stop complaining about it.
I did ask you to be candid. Lesa, can you walk us through some of this? So you focus more on single detached. So when you're building a house, step code, environmental setbacks, engineering requirements, walk us through typical house build. What are some of the escalations in costs that are driving up the house itself, whether it's time or whether it's actually something you're cutting a check for directly?
Yeah, I would say that the same house we built 10 years ago costs double now, and probably even less than 10 years ago. So if a client comes to me looking at an ALR lot in Abbotsford, for example, and they want to apply, we're looking at kind of 6 to 12 months dealing with ALR to get approval for a farming family who just wants to have their grandparents there still working on the farm. We're looking at 6 to 12 months to get together engineering reports, everything like that. Approximately $70,000 before you break ground for a single family home that's 1,500 square feet, coach house. It's just completely unaffordable, and if that person did subdivide, I mean, in Abbotsford, we're looking at DCC rates of 58,000. In Mission, by 2027, that'll be 74,000. And while I understand municipalities are really struggling with infrastructure, there needs to be provincial lending, looking at the infrastructure problems, that all of these fees and levies are not put directly on first-time home buyers or first-time home builders or any home builders, because development is not paying for development. Development's paying for things it was never supposed to pay for. So the accountability and collection and expenditure of DCCs is just not there provincially. And we're seeing it bleeding out. We're seeing projects getting shelved. Nationally, 38% of CHBA members are reporting layoffs. Multifamily in BC, we're looking at 20-25% layoffs. Marketing firms are closing. Firms are moving completely out of Canada. I think I said in our planning call, it's a bloodbath, and it's going to take all 3 levels of government to come together and fix this. An immediate moratorium on any changes, any further moves on step code, any changes on net zero, zero carbon, anything. Complete moratorium, letting all the municipalities roll back to where the provincial level is now, and making no changes until 2030, until our industry can recover. That's a necessity nationally and provincially. Our industry is in shambles, and people who had jobs and had guaranteed incomes, they don't have that anymore. People who never thought they'd lose their job are losing their jobs right now. And it's going to be all of us coming together to work on that. There should be no further changes to code at any level without removing something from that code. And you're completely right, like there's hundreds of code consultations every single day, and the individuals who are at those tables are manufacturers and they're engineers, they're not builders.
Thank you. Here's a question from Slido. With building code becoming more stringent and commercial construction getting more expensive, how do you foresee the future of brick and mortar retail/office space? Or industrial for that matter?
Well, it's a lot to unpack there. I didn't heard questions today. But to me, the bricks and mortar and the back to the office, back to work and working together, I think is certainly taken a firm grip and is here to stay. So, I mean, I think what has happened in the past is, and we're talking about affordability, and it's the opposite of affordability is how you continue to develop, and that is by making the occupants of your buildings, whether they're industrial buildings, office buildings, any commercial building, they just have to pay more in order for them to achieve and get what it is that they want to run their business, manage their business. I mean, in terms of office lease rates in downtown Vancouver, I would say right now, the height of the market is about $50 a square foot for someone to build a new office building in downtown Vancouver. The rental rates need to be $80 or $85 a square foot. So the mathematics isn't going to work for a while. I think it's probably true even of the Exchange Business Park in Abbotsford. If we were to try and get a building off of or out of the ground at this stage in the market, someone would have to pay more than you could pay for an existing building. And it's probably not to that same extreme, but there's still, until somebody's willing to pay that little bit more, and all these points we're making about regulation and the cost before you've even started, all of those things would help, but that's really the only mechanism, is someone's got to pay more than market to get you to the next level.
Right, and keep in mind, if that business owner is paying more for the rent, you're paying more for the finished product or services. It always comes down to the consumer.
For all those people paying $80 for office space, we have office space.
I just said you would have to be. No one's paying $80.
I think in the commercial real estate market too, we're going to start to see buildings getting driven to larger buildings that have smaller units in them. So cost goes up, the amount of people are going to try and be more efficient with their space, rent smaller spaces. But then when you look at all of the things you have to build in a commercial building regardless of the size. The economy of scale for things like foyers, elevators, exits, all those things that you're just gonna see bigger buildings that are full of small units, which I hate.
Well, we've all seen dramatic cost increases in housing over the last 20 years, 10 years. I think there's, from one building I built, almost exact same building, 5 years later cost almost twice as much. So we've had a real steep increase costs over the last 10 years for sure. Since 2015, we're probably up 100%. So those costs also, they ripple down, like the office rent or the industrial rent, where someone's producing a product that we buy, that product is now more expensive. Just things have changed, I would say, exponentially over the last 10 years, probably more so than, say, the previous 30 years from that. There was a long time went by in my career where it was $80 a square foot, or less, $60 a square foot, $80, $90, $95. No one wanted to say $100 a square foot. Well, now it's $300 a square foot, just sort of within the window of my career. And so much more has changed. It's the timing of delivering the product, and that comes from the conception of purchasing land, from the acquisitions of land, to planning what's going to go on that land, to entitlements of the city. We used to allow about 6 months for that. That was everything. Rezoning, development permit, building permit, pre-planning, land acquisitions. I've identified a piece of land 6 months later and I'm pouring concrete. So the life cycle then would be 1.5 to 2 years for a life cycle of a condominium. If I identify a piece of land today, if it falls within all the tick boxes in the OCP, if it has servicing around it, I'm looking at a 5 to 6 year cycle for the exact same product, right? So what's changed? Like 30 years ago, when we built an apartment building, there was about 16 to 18 pages in the drawings. I know there's some people in this room that have some of their drawings. Electrical drawings have probably 60 pages. Mechanical drawings have probably 80 pages. Architectural drawings have 150 pages to produce the same product. So we've increased the level of everything, and it's driven the cost way up. Decision making, I think there's, and it's not just in government, in provincial or municipal, it's in companies as well, the culture of the company. There needs to be a more flexible culture, a more open culture, where you have this relationship with a planner or with a plan checker or with a building inspector, that there has to be a level of trust. That level of trust needs to be earned, but that culture and the efficiency of that culture, it can help. And you know, time is money, so if you can take a project from 1.5 years, if you have to drag it out to 6.5, 7 years, well, it's, you know, I was never that great at math, but it's just going to cost that much more, right? And that's been everything, right? So we need to sort of take a step back, like they say. We need to have, we need to undo things, not keep adding things. What have we undone in the last 5 years to make the costs go down? A building built in the 2012-13 building code, is it unsafe? No. The building built in this current building code is going to cost 40% more. Is it that much safer? There's somewhere in between. Maybe we need to turn back. We need to rethink living in general. Like what we ventilate our units now in case you suffocate before you open your window. Like we used to just open the window when we needed fresh air. Now we have a machine do it for us. Right? So you know, technology and increasing quality, all those things I think are really great, but it has to come with a balance, right? We want to create safe buildings. We want to use current technology. We want to use AI in construction. We want to do all these things, but it's that bringing it back to basics. What do we need to turn back? If we don't turn back anything or change something on the economic side of the actual hard costs of the structure, we'll spiral out of control.
Thank you. What you just said kind of spurred a question to my mind. When I look around the room, I see a number of my colleagues from the real estate sales side. Question to them, how many of you have had a buyer say to you, to what year building code was this house built? Anyone? Yeah. I think that backs up what Gerald's saying. It's not what the consumer's asking for either. It's what someone has decided is going to be forced upon the industry, and it's probably the same person that was standing at the podium saying, vote for me and I'll get you affordable housing.
If you're hired by the government and your job, you and your team, your job is to make housing safer. Now, these people are just doing their job. And it's in all these sectors. I forgot the ALR. But there's thousands and thousands of people employed to push those agendas on our housing and on all of our buildings. And they're employed by the government. So if you guys actually wanted something to change and you want these things to happen, the government needs to decide to hire thousands of people to decide how to make housing cheaper to build. And if that doesn't happen, then nothing changes.
Great point. So in recent years, we have seen, and the stats earlier in the morning also showed that we've seen a decline provincially, not so much municipally, but provincially, of housing starts from 2023 to 24 to 25. So a definite decline in British Columbia. However, when you look at Alberta, they saw an increase in housing starts over those same years. Now, the stats that I found ended halfway through 2025, and some of my colleague friends out there are saying the market has turned a bit out there. But we all know some of the big developers that have pulled out of the Lower Mainland and decided to focus on other markets. How do we bring those back? What do you see in the next 5 years where we can stem that tide, create more product in our market? Gerald?
There's a lot of developments and a lot of developers that have product ready to go to the market. So when there's no consumers, and the typical model is you plan it and you pre-sell it in order to get sort of achievable financing. If you can pre-sell a product out to, say, 80% pre-sold, 75% pre-sold, which would be the bank's targets if you went into for financing to borrow about 80% of your costs. Well, if you're going to go in and bring product to the market today, you're not going to get 80% pre-sales. You're not going to get 15% pre-sales. So you have to bring the product to market differently. So where a developer could maybe bring 400 units to market, now he can only bring 100 units to market because that's much more equity they're going to have to pour into it. So everyone, we can produce the units. It's when there's no consumers, for the money stops flowing, the developers will just pull back. My affiliation with the Mission Group in Kelowna, we probably have 800 units in the pipeline that are just on hold because we can't get that pre-sale, and we can't get financing. So your equity pool shrinks down to a manageable size property, unless you have a pension fund backing it. The sales drive the product, right? And so a lot of guys say, well, let's build a rental. And we're seeing lots of that, which is good, which I think there is some relief in the rental market where there is more choice, especially in markets that have been really building, like Kelowna. Vacancy rate went from sub 1% to plus 7% in a matter of 2 years.
And now the rental market's
Now the rental market's soft. So, maybe we did the right job.
I mean, layered onto that, Paul, I would say that you're also in a situation where, as the larger developers is going to find the place where they can create the best market environment, which also includes the certainty around entitlement. And I mean, I think that's always been a challenge of this region, is you go to every municipality and you've got a different set of rules every time you show up. And some people are fast at this and slow at that, and not so good at this, or don't have a department for that. It's very challenging as the market sort of gets stagnant, stale. There aren't buyers. There's not a pre-sale market. And I mean, I'm just hearing you say Alberta as a specific example. Calgary is Calgary. The whole place, north, south, east, west, wherever you want to build, you're dealing with Calgary, and it's the same people. So there's a lot more certainty that you can create in a market. Yes, there's inter-provincial migration that's happening in Alberta that's benefiting, and there probably is a pre-sale or a demand there, but it's both of those things, I think, not just the fact that you got nobody that wants to buy at a particular point in time. You're chasing, as a developer, the certainty of getting from A to B with as few roadblocks as possible.
Excellent. So I'm just getting the signal here. At the Chamber of Commerce, we're very cognizant of time because a lot of us have to get back to our day jobs and make sure it functions. So we're just about done, but I'm going to give a couple of, like a minute each for you to highlight one choke point, one friction point that you would like to see addressed going forward that's going to make it easier for you to bring your product to the market. So let's start with Lesa.
Yeah, like I said earlier, moratorium on any changes to BC Building Code, any changes to National Building Code. And Alberta is successful because they're outperforming us in every way. So they're actually funding things, they're working with their departments. Edmonton has the fastest processing time in the country.
Probably going to feel like we're picking on the city, but they are a big part of our process. I think if we can see in municipalities in general, especially smaller ones like Mission, Abbotsford, Chilliwack, when you bring a development into a city hall, if we could have one point of contact that can see that from A to Z, we feel we're making sometimes 4 or 5 applications: engineering, parks, environment, planning, engineering. If we can get to a single point of contact that can project manage the process on a municipal side, and that municipal staff, and this goes in general, I think, culture in our environment, that they're not scared to make a decision, right? And they're not scared to build a level of trust with the development community, because we need to break down those barriers and have a real working relationship in order to bring things forward quicker. If you're moving something quicker, it's always more successful.
Adding on to what Gerald said, I would have a suggestion for Abbotsford and most municipalities is the consideration to expand the use of certified professionals as far as getting you through the entitlement process. We have been involved in a number of projects. This is somewhat new in the city of Vancouver, but it's been extremely effective and very time efficient for you getting through the process, is to have somebody in the private sector that is trusted by the local municipal government to do the work as they require it, but has a lens and is more considerate perhaps to the private sector getting this through a process much quicker. So it's certified professionals, I think if we could see a whole lot more of that in a whole lot more municipalities, I think we'd all benefit.
One thing, if I can only pick one thing, the provincial government probably has the biggest impact on the affordability and the timelines for our development. And they manage municipalities through the Local Government Act, so they have the power to enforce what municipalities do or don't do. So if I could choose one thing, it would be for our provincial government to actually set up an intelligent and capable team who is tasked with making housing and development more affordable and to build and faster to build, because they have the most power to be able to do that.
Okay. The recently report Senate just released a report on housing, and it's actually called Out of Reach, and they suggest setting that up at a federal level to look at exactly that. So maybe they're listening.
The federal level would only be National Building Code.
Yeah, but they're trying to harmonize too.
Okay, fair enough. But the province has the ability to delve into all sorts of different areas that have increased or created a massive increase in complexity and cost and time for us to build. Yeah.
Thank you. Great feedback. Now, we've all got homework, right? Anytime you have an opportunity to push some levers of change regarding this stuff, you now have some content that you can speak to. It's not enough to say, make housing cheaper. Remember some of the points you heard today of what the specifics are. And let's push for some change in here so that next year when you're having this discussion, it's not, well, nothing happened last time, I don't want to be on the panel. So thank you all for showing up. Really appreciate you taking the time and lending your wisdom to the group here. I'll hand it over to Alex.
Just a round of applause. As we always want to make sure we keep you to time, I'm going to wrap things up very, very quickly here with a few thank yous. And so another major thank you to all of you who shared your ideas, your expertise with us today. Thank you for that. It was a really great and interesting discussion. And thank you to our moderator, Paul. So one more round of applause. Now today's event, again, would not have been possible without the support of the Business Development Bank of Canada, and then August in Town Developments and Blossom Homes. And so we're really grateful to those organizations for supporting today's event and bringing us all together. And I'd also like to say a big thank you to our pillar partners, the Chamber, RBC, Dome Graham Thornton, Rogers Media, Chambers Group Insurance Firm, and Myriad Technologies. They support us at everything we do all throughout the year and really are our ultimate champions out in the community. So thank you to those organizations as well. And I want to let you know about a couple of upcoming events that we have happening at the Chamber. So on February the 11th, our Business After Business is happening at Lanka Jewels. These networking events are always free for all of our members, so feel free to join us on February the 11th. There's another one happening on March the 18th at Communitas. It's another great local organization. And then we're also celebrating International Women's Day on March the 6th in partnership with the University of the Fraser Valley. We'll be showing bits from a new documentary called Jacinda, showcasing the leadership journey of New Zealand's Prime Minister and her through her time of leadership. And that's in partnership with the Women's Leadership Council at the Chamber. And our AGM, because AGMs can really be fun, is coming up on March the 25th. So we'll be welcoming in some new members to our board of directors, bring their members together just to check in on how we've done over the past year and hear from a great speaker. So more to come on that. Thank you again. Thank you to all of our partners who've made this possible. I also want to thank those who've given their time to help make this event happen. And so I see you here, one of our volunteers, Cameron, one of our practicum students, and Zareen. She's right outside. You met her when she came in. Our practicum students from UFB, and then of course the Chamber team. So Thank you for sitting with us, joining in this conversation. I hope there's been a nugget that you'll take with you, a new conversation, a new contact that can help support you in your business. And we look forward to continuing to be there alongside you, supporting you, advocating for you on behalf of our business community here in Abbotsford. I wish you all a great day. Get home safe. We'll see you again at the next one. Thanks, everyone.